we're going to run out of Ethereum co-founders pretty soon, but we've got Hoskinson with Cardano, right? We've got Gavin Woods of Polkadot. They're doing their parachain auctions this last week, so it's becoming more live. I recently had, Silvio Micali of Algorand, who has another consensus protocol, and I had Edmund Gunansir of AVAX, who has his own consensus protocol. All of them are getting traction in the market. All of them are top 20 market caps. They've got real customers. They've got protocols, uh, and then some. But again, I do feel like we're going to be in the layer one wars in the next year, and I also feel like there's not that many people left, that have a history of understanding a lot of these complex pieces. They could even credibly talk about a reasonable new consensus algo or a proof of stake. What other ones are on your radar, at least for price action for your readers?
I mean, the main ones that I've been covering besides Bitcoin would be Ethereum and Solana. And there's a small number of other ones that I touch on, but those are the two that I've been focusing on in terms of price action because my service is we cover equities, we cover commodities. We're not a crypto service, and so I'm not sitting there saying, okay, this 25th biggest crypto is attractive. And if anything, because I'm more in that Bitcoin side, I'm basically looking at it and saying a lot of these projects, not every project, but a lot of the projects, they're not being transparent with their trade-offs. I think some of their founders are not even fully aware of the trade-offs that they're making. Like they might get it in the technical sense, but they might not fully understand what made Bitcoin successful. And we generally see a pattern where Bitcoin has these bull runs every 4 years. So or roughly 4 year cycles. The first one was kind of off. So you had 2011, 2013, then you had 2017, and 2021, right? So these kind of 4 year cycles. The first one was a little bit compressed because it was different. But overall, every time Bitcoin has one of these big bull runs, everybody gets into space. They want to make their own coin. They want to try something different. And again, there are some of them that are essentially professors that are basically tokenizing their research. So they're contributing to the field in a way that some would consider, it's challenging because they're essentially issuing a security, right? So a lot of these they pass the Howey test, and so they meet the definition of a security, which has its own challenges. And then it comes down to how transparent they are. And generally, if you look at kind of the theory of money or historically how money works, it tend towards network effects. So strong money over time pushes away money that is less decentralized, less credible supply, more prone to changes, more prone to centralization. And so that's why a lot of Bitcoin maxis focus on Bitcoin and exclude the others, because there is a very high percentage of scams, frauds, over promises, insufficient trade-offs happening in their space. Now, I go a step less than saying, some Bitcoiners say everything else is a scam, whereas my approach is simply say Bitcoin is different than everything else. So those other things else are just a different category, which I think is overall highly speculative, and that there's a large percentage of them that are not being fully transparent, or the people aren't fully aware of the trade-offs that they're making. Like when I talk about Solana, for example, there are a lot of people that are like, what do you mean it's manual slashing? Right? So they don't fully get the technical details of what they're investing in, which could be fine if they have, 1% of the portfolio in it, right? But if they're like aggressively in a protocol and they don't understand some of the technical details of why it's different than Bitcoin, that's a challenge. And then the same thing happened when they had all these meme tokens, the dog tokens, like the Dogecoin, Shiba, all these other ones. Relatively few of those buyers, especially on Robinhood, where they're just buying, they're not self-custody anything, they're not using them, they're purely speculating on a screen. They don't necessarily see the technical trade-offs that all these different tokens make, the different network effects, how the nodes actually function to maintain the network. And so I think that's during bull markets, unfortunately, a lot of retail investors pile into things that they don't fully understand. And then it all comes crashing down when there's an inevitable bear market. And so far we've seen Bitcoin's the one that survives through those cycles. Ethereum's gotten through 2 cycles, and very few other tokens. There's a huge track record of not getting through to a second cycle, meaning that you have higher highs than the prior cycle. And so basically, investors should be aware of the math that's against them when they're speculating in these tokens with anything other than fun money.